Hello, I'm Mario Robleto with SAENICSA, Accounting and Tax Services located in Managua, Nicaragua. And today, we will be covering the topic, understanding a cash flow statement. So stay tuned. Last week, we touched on how practical it is to have and make a periodic use of a cash flow statement. For example, we mentioned that net profit is not equal to cash flow, and that neither is your total balance in your bank account. Also, we mentioned some of the benefits that creating and using a cash flow statement can give a business owner, especially in regard to whether or not a company is generating sufficient liquidity or cash to cover obligations. Now, continuing with that topic today, we are going to discuss how we can get a better understanding of exactly what this statement is telling us. What does a cash flow statement look like? If you have never seen a cash flow statement before, it is something somewhat similar to an income statement. To give you an idea of what it more or less would look like, take a look here. As you can see, there are three types of cash flow categories that are shown on the statement. Them being cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. What do these cash flow types mean? The cash flow type, operating activities, refers to the cash that originates from your main business activity. So this means that all the money that was generated for your business selling the product or service for which it is known for. Now, cash flows from investing activities is different, since it only takes into consideration cash that was generated from when your company had money invested in financial instruments, in capital markets, or capital investments in other businesses. And finally, the cash flows from financing activities refers to the cash that your company generates either through receiving additional equity through their shareholders or when receiving capital from an external third party, such as a bank or another financial institution. Now, how does this benefit me? Well, now that you have a clearer idea of what a cash flow statement is and what it looks like, it's important to make good use of the statement. In reality, the cash flow statement is taking important information from both your income statement and your balance sheet, while providing you a clearer idea of one of the most important parts of your business, its liquidity, its cash. Therefore, when you can clearly see not only the availability of cash within your business, but also the sources where it comes from, this permits you to better manage your budget and your financial obligations. With this information, you can make important strategic decisions, such as investing or divesting in a separate venture, or even if you should expand or not your current business. Also, a cash flow statement can help you decide whether your business is over-leveraged, or, whether you're carrying too much debt or not. And it can tell you the exact opposite, and in fact, show you whether or not additional capital through financing could open opportunities for further growth. So, make good use of your cash flow statement. Well, that has been our video for today. We hope that you have enjoyed it, and that the tips we have discussed here, that you'll be able to implement them in your place of business. Thank you very much for watching, and until next time, stay safe and take care.